Hey, I'd like to welcome you to another episode of Mission Matters. My name is Adam Torres, and if you'd like to apply to be a guest of the show, just head on over to missionmatters.com and click on Be Our Guest to apply. All right, so today I have Christian Chodnik on the line, and he's a founder and managing director over at Althera 42 Capital Partners. Christian, welcome to the show.
Thank you for having me.
All right. So, for everybody listening, this is part of our Super Return Berlin edition where we cover the best of those that attended and participated in Super Berlin. So, today we're going to be talking about royalty investing as a new asset class in private markets. I'm so excited to get into that, Christian. But before we do, Super Return Berlin, tell me about it. Have you been in the past to a Super Return of a conference or event, or is this the first time? Like, give me some of the backstory.
No, I'm a veteran of the conference. I think this was the eighth or ninth conference, so I'm always really happy to be there, and it's super inspiring to meet all the people from the industry and to listen about what's going on in the market, the latest trends, data, the sentiment. So yeah, it's always fun.
Oh, that's awesome. Eighth time. So, roughly, I think this is my first year covering it, and it's been so much fun to get to know everybody and to see more about what's going on. And this has been a big part of the expansion we've been doing into Europe. I've been doing interviews for quite some time globally, but to get into this conference, when it came to my radar, people were like, "You're not at Super Return. You're not doing this." I'm like, "Well, I don't know. We're just starting to really expand in Europe. So, am I supposed to be there?" They're like, "Yeah, you're supposed to be there." So, I believe as of this moment in time, you have the record for most conference attendance and that I've had, at least on the show, I mean. So that being said, what keeps you coming back? You're a veteran. What keeps you going back? Well, a lot of the ways you could spend your time. Why this?
Well, I mean, it's just a place to be. And, there are so many conferences, but it's the main conference and you meet everybody there and you get the sentiment in the market. And, happily for me, I think this year was really the first time that people started to talk about royalties. So I was really happy about that.
Wow. So you were, and actually, this brings me to my next point. So the market shifted. You're like, I've been trying to tell you about this for years now. So first off, before we get into like this year, let's start with maybe setting the stage with your firm. So let's maybe give us an overview of the firm first to start, and then we can go into why you were so popular this year.
So we are a royalty investment firm. And so royalties has been around for, I would say, forever, but there's an established, way of investing, I would say, around 30, 40 years, coming from metals and mining, and then, of course, a lot in pharmaceuticals and healthcare, and recently music and entertainment. And we take that model and apply to the tech sector and the tech world.
I think most investors are like, at the very least, are probably they've heard about it when it comes to music, entertainment, things like that. Like they talk about royalties a lot for artists, things like that, whether they got, didn't get. Can you tell me, like, give me an example, like what this can look like in the tech sector? Like, what does that mean?
Yeah, so there are two different ways of investing into royalties in the tech sector. So one is basically when there is already an existing royalty income or licensing income. So in music, you have music rights that then
Hmm.
generates a royalty income whenever people are listening to the music. In the tech sector, the analogy is basically you have a patent portfolio and people who want to license the technology that is protected by the patents, they have to pay for that. So, and that generates for the owner of the IP a nice royalty income. And what we are doing is we acquire all or part of these royalty streams. That is one part of what we're doing.
And so let's go just maybe a step deeper into that part. Was this the part, or why were people talking about this year at Super Return, where maybe I believe you insinuated maybe in the past they weren't kind of talking about it quite as much?
Yeah, I think there are two reasons why people start talking about royalties. One is more the current situation in private markets. I think that the situation is a little bit difficult because private equity has not been returning the cash and the returns that LPs have been expecting. Also, private credit has been flooded with liquidity, and there's, in my view, a general trend of decreasing yields and increasing risk, which is never a perfect mixture.
Hmm.
And so investors are really looking for something new and different, and especially also for uncorrelated returns because we are
Yeah.
living in a very unstable world. Some people think we are close to a total collapse. Other people think we will fly to Mars soon. So it's really a confusion in the market and nobody really knows where we stand. And in such a situation, investors are looking for more like a safe and stable way of investing and an uncorrelated investment. And that's really what royalties is about.
Yeah. And the idea behind this, like when you think about the correlation side, and I guess to go a step further into like who are the types of investors, would this be like institutional investors? Would this be family offices, high net worth individuals? Like give us a little bit of feel of the types of investors you work with or have worked with and why this like lack of correlation would be important to their portfolios.
It's both. So it's institutional investors and family office. So it's really for investors that are looking for yield. So with a royalty investment, you cannot make 20x or even a 10x like you can do in venture capital or maybe even in private equity. That's not really possible with a royalty investment. So it's more investors who are looking for yield, but a yield with a highly attractive upside. So you have on the one side, you have an ongoing cash income that is generated by the royalty stream. But on the other hand, you still have a substantial upside potential and really the possibility to participate in the success of the intellectual property or the company that is generating revenues from that intellectual property.
Talk to me about deal flow. Like, how do you come across your deals?
Yeah, so royalties, as I said, comes from, especially from healthcare. If you look into the growth in the healthcare and the pharmaceutical space over the last 10, 20 years, I mean, quite astounding. So there is sort of a spillover effect from healthcare and from pharmaceuticals into the tech sector. So there's more and more entrepreneurs hear about royalties as an alternative way of raising capital for them without getting that. And that helps. So there's a general interest from the market in this. So there's a lot of entrepreneurs coming directly to us, actively searching for this opportunity. And then it's, of course, as always, through our personal network, through my network. I've been in the market for a long time, so I know a lot of people. And so it's just, deals are just coming all the time. So it's more like finding the right ones. Now we identify particular companies that are, from our point of view, given our research and our interests, particularly interesting. And then we would just reach out to them directly as well.
And so go a little bit further into what that could look like. And I don't mean necessarily the reach out, but I mean like when you decide how do you decide when you're going to actually allocate capital? How does the deal have to look like? Whether you want to give me specific or broad parameters, what does it have to look like for you to commit capital?
Yeah, we have two different ways of investing in royalties. One is to acquire existing royalty streams. That would be when companies are licensing their IP to third parties, and then we can acquire these royalty streams. The more frequent way of how we invest is really what is called synthetic royalties. And that means that we basically buy a slice of a revenue stream. So let's say there's a technology company generating 20 million of recurring revenue per year based on a strong IP. That could be a strong patent portfolio, that can be specific trade secrets, that can also be software code. And most often it's a combination of that. So as we acquire a slice of this revenue stream, typically around 5% of the revenue stream of a company, the most important thing we look at is, of course, the revenue, right? So we focus on the revenue. How big is the revenue? What's the quality of the revenue? How diversified is the customer portfolio? Is there a strong concentration on single customers? That would be a sort of a red flag for us. What's the churn rate? What's the net retention rate? That is really the core of our initial analysis. And we focus now with Altera currently on companies with around 10 to 100 million in revenues. So these are not startups, but these are not big corporates either. So it's just like in between, I would say like Series B, or in Europe would call it lower mid-market companies.
So speaking from the company side of things, like obviously, and correct me if I'm wrong on any of this, but the company's gonna have to be doing pretty well in this portfolio. Why would they want to come and either sell or lease, or you could take it from both sides, but basically if they wanted to sell it, so that's one of the ways that you did would be to buy it outright, or then maybe to sell a sliver, so they're raising capital for some reason. What are some of the reasons why they'd want to do either, maybe?
Yeah, so I mean, in general, until now, before royalty investment came into the market, as a business owner, you have two possibilities, right? So either you raise equity, or in the last 10 years, there's, of course, has developed a private credit market. So you can raise credit from venture debt firms or from growth debt firms. So these were the two options that you had. When equity, you get diluted, right? And with debt, you might get the money, but no, debt can be at times really brutal, because it's not only about the interest payments, but it's also about the amortization, and amortization schedules can be quite brutal and suffocating for a company. But still, entrepreneurs, of course, are looking for non-dilutive capital, because, I mean, that's what you have when you build a business. Now you want to keep as much ownership as possible. So we are really offering here an alternative to debt and to equity, which is non-dilutive, but at the same time gives a company much, much more flexibility as traditional debt. So that's the core. And then in the current market, what plays in our hands is that, especially in the tech sector, if we now take away the super hype AI sector, but let's say like the more general tech sector, the valuations have gone down quite substantially the last years. Now, not only in SaaS, of course, also in SaaS, but across the board. And so there's a lot of investors that have invested into businesses at much higher valuations than what the business is currently worth. There's the founders who live in the belief that their business is worth more than what it is actually worth at the moment. And raising another round of equity in such an environment can be very difficult, because you have to accept basically a down round, and nobody wants to do that. So then when we come in with a royalty solution, that offers the possibility for the business to bring in additional capital and to continue to grow without crystallizing the valuation.
That makes so much sense. Christian, this has been great having you on today and getting to know more about royalty investing as well and what that looks like. So appreciate that. I do want to give you the opportunity, though, if somebody's listening or watching this and if they want to follow up and they want to learn more, how do they continue the conversation?
Yeah, it's always best to go to our website, to www.altera42.com, and then please feel free to reach out to me on LinkedIn. You find me on LinkedIn. I'm Christian Czernych from Altera 42. So just drop me a message whenever you want.
Fantastic. And for everybody listening, just so you know, we'll definitely put some links in the show notes, so you can click on the links, head right on over, connect with Christian and his team. And speaking of the audience, if this is your first time with Mission Matters and you haven't done it yet, hit that subscribe or follow button. This is a daily show. You heard me correct. Each and every day, we're bringing you new content, new ideas, and hopefully new inspiration to help you along the way on your journey as well. So hit that subscribe or follow. And Christian, thanks again for coming on the show. It's been a pleasure.
Thanks a lot, Adam. It's a pleasure too.